Now let's go over what the indicators actually mean. So Thomas, if you want to just double click on the top indicator area, but before we do this, let's go to your watch list and click the little watch list booklet on the right hand side, so it takes the watch list away. So on the right hand side of that, keep going over to the right a little bit.
Okay.
Touch that once. Okay, perfect.
Okay.
So now we're really into a chart. So if you double click on the indicator on the left hand side a little bit more, just double click in the upper area. Yep, and we're just going to look at this one indicator set. So if you double click, it'll take us just to that. Now, if you feel like you're stuck in here, to get out of this view, you just double click again, but don't do that yet, okay?
Oh, okay, cool.
So double click.
Gotcha.
Okay, so now we're in what the ERI stands for, early reversal indicator. So what that is those are the arrows. And the arrow, green arrow going up, is saying that the early reversal indicator is saying that it's going to go up soon. So that that's what that means. It happens before the actual movement happens. The next part of the indicator is called the ATR. That's the average true range. So what that is and what you could do, Thomas, is you could go take your cursor to the left-hand side where it says ERI chart. And if you click on that little eyeball to the right, if you click on that, it'll make the indicator disappear. Okay, so we'll turn it back on in a second, but I want you to see what the average true range is. So that entry and exit. So this is a 5-minute chart. So just know that every candlestick on this is showing if it's going up in 5 minutes or down in 5 minutes, or the bars, however you want to call it. So right now, it's in a downward trajectory is what the red shaded area is, and it's saying it's time to exit, which is, yes, if you take your cursor to where that exit was, the date is going to be on the bottom. So Wednesday the 15th of March 2023 at 2230, remember it's a 5-minute chart, it was saying it's time to exit. Okay, so now we can go click back on that early reversal and let's put it back on. So I want you to also understand the early reversal indicator comes with these 3 lines. Perfect, thanks. Those are Keltner bands. And what this is, it's the average of what the price is within 3 different ranges. And what this is the simplistic way to explain it. When this is going to go up, when the price is about to go up, the first thing it'll hit is the first line, the second line, the third line. Let's put the ATR back on. So click on that. Okay. And then above that, when it says BTC, click that eyeball so the Bitcoin comes up. Okay. And we are missing the candlesticks on this. So let's take the Bitcoin volume off again. Go back to the BTC off. And let's double click your chart again. Let's go back out. Okay, I got to get your candlesticks. Okay, so here's okay, let me see what is going on with this chart, because there's one thing we need to get is your candlesticks have to be turned on. Okay, so maybe one of those. Let me just see. Okay, I think that maybe on the one of the settings needs to be changed to get your candlesticks up. So let's go into your settings again, and let's make certain that we go through the whole thing down, even to the scales. Okay. I actually show me. Go to your chart and right click.
Anyone.
On the top area and then right click. Yeah, go to setting, go to the top area and right click. I want to go to settings. And then I want to, no, so X out of that. I want the settings for the entire chart system. So right now you're in the ERI settings. So go into the upper area and click an area that's, yeah, just right click there. Perfect, where you're not on an indicator. Okay, settings. All right, so give me a sec. I'm going to just look at your chart and then look at mine. So 1, 2, 3, 4, titles, background. So status line. Okay, that's right. Can you go to scales? 1, 2, 3, 4, 5. Okay. Go to appearance. Okay, let's refine. And go to symbol up top. 1, 2, 3, 4. Okay, one sec. Symbol 1, 2, 3, 4. Body and symbols, body, borders, wick, and last should be clicked.
Yeah.
Okay, status line, title, titles, and background. That will look right. And your scales had symbol, last price, indicators, no overlapping was checked, countdown bar to close, and plus button. Okay.
Symbol last price value according to scale.
Okay, let me see. Last price. Oh, which one are you on? Scales?
Yeah, scales.
Yeah, symbol last price according to scale. Yeah, that was it. Okay.
Okay.
So I've got to get I'm gonna get something else at okay, I know what it is. Okay. All right. So okay, can you say okay? So all of that status is perfect. What we are missing is on that top indicator. So you see how on the second section down it says Bitcoin USD stamp, Bitstamp?
Yeah.
That right there should be moved up top to overlay with the volume. So let's see if we can drag that. So click on that BTC USD Bitstamp. Okay, now click on the 3 dots on the right-hand side. We want to move it up. So
okay.
move up to existing pane above. All right, there we go. So it was doubling up on the trend indicator. Okay, so now let's double click in there. Double click in that section. Yes. Okay, beautiful. So now I'm going to explain the 3 amazing counterband lines, okay? So basically, Thomas, if you take your fingers on your mouse and you pull them down, you're going to widen the screen so we can get a little bit closer view of these. Like you just want to. Yeah, perfect. So I just want to zone in on this. So the bottom Keltner band is typically the first place. Like when you're in the red, when the indicators are red and they're below the bottom band, it's usually going to rise to the first band first. The second band is typically going to be the next ceiling. As you can see, like those red candlesticks, which stand for low on the volatility index, that they're oversold for the 5-minute. Remember this. Then it says that the first price ceiling it's going to hit is that second band, and it did. You could see how many times were those little wicks like just testing that second band. So if you're in there, and this can't be financial advice because I am not a financial planner and never will be one, okay? So this is very riskful. Everything is risk. So here's the thing. If I was buying something that was below that first Keltner band, and I always say, pigs get fat, but hogs get slaughtered. If I wanted to get in and out within a 5-minute chart, then I would only predict to sell at that first Keltner band if it was below that. But now that it's above that, I would say I would want to sell at that second Keltner band. Now, right now you see that, like, look at that. It just broke through. The candlestick is now black. That means on the volatility index, which is the lowest thing, that for Bitcoin for the 5-minute chart, it just broke out into the black zone, which I call let the cake bake zone. So it's not oversold and it's not overbought. It's let the cake bake zone, right? So my next stopping point would be at that top Keltner band. So if I bought right now, I would set the sell for the price of the top Keltner band. So you see the blue 24,023. That's the next 5-minute ceiling. So that's where I would say I would sell at that point. And even if it will go past that, I want to be a pig and I want to take my profit. And as you can see, look, the 1 minute, 3 minute, 5 minute, 15 minute, it's all going up. So now like double click this so we get to see all the indicators wrapped in one.
Okay, so just to make sure that I understand it correctly, so if you want to basically predict an entry and an exit, then you got to look at these bands, and you
Right.
call them the Kelpner bands, eh?
Yes.
Okay, so basically, if it comes down, so you basically wait till it's here. Looks like it's have a good break, so you could start considering getting in this kind of the bottom area.
Yeah. Yeah. Right. Right.
and
Exactly.
and then wait for it to basically progress. If it breaks down, obviously get out, because you're going to lose. But if it still continues with the momentum going up, then and when it breaks in the second top area, then you start looking at what your potential exit's going to be.
Yeah. Well, basically, if you're swing trading, you may buy at the market right now and then you set your sell immediately. And these are good indicators as to where the next potential within this time frame exit is. So that's where
Okay.
it's great to know your time frame. Like if you're getting in and out in 15 minutes, then yes, the 5-minute chart's a great place to pace yourself at. But if you're a more patient trader and you have more stamina and you're not risk adverse, right? And you're okay losing, something and winning more, then the longer time frames historically give you more money because they have more time to season, to grow, more people to get in and to get out. So this is great for knowing your potential ceilings and floors, and it gives you a gauge. Now, the other thing about this indicator that's so effective is that you can see that the indicators are red, and I like to buy on the red and sell on the green. And that's reflecting. So I want you to double click on here.
Okay, so you're talking about this area here.
Yeah,
You're
I
going to
need you to
basically look at.
understand what that's reflecting. There's the bottom indicator right there, that volatility index. When you're in the red zone, which is the oversold zone, that candlestick is red. So you understand why it's red. That candlestick is not red because it's going down. That candlestick is red because it's on a floor. So that says this is on a floor. So it's like you want to buy when it's super sale. Now, this is a 5-minute chart, so there's a lot of movement. You're going to have a lot of floors and a lot of ceilings. The farther time frames that you're going to pull out, it's not going to be on the floor. But what's beautiful about the radar is on the right-hand side, you literally are seeing the average of where this is going in multiple time zones. So it's similar to having, like, in the olden days before the radar was developed, and these are proprietary indicators. So nobody else has this unless they have these indicators, but you can see what's happening on 12 different time frames. Usually people have 12 different computers going at the same time, but now you see the colors. If it's up, it's red. If it's down, if the price is moving up on the 15-minute average at this moment, it's going to be green. If the price is going down on average during that time frame, it's going down. So
Correct.
when it looks like red and green, there's no consistency, and you'd like to have like all your money on the line. It's great to have all of those indicators in one color. That means you don't have this like conflicting time frame issue, and all colors in one direction are pretty solid, that it's going to continue that momentum. But you can see these colors are different, so there's a lot of I guess back and forth with Bitcoin right now, right? Which is great. You want something with a heartbeat because it's active, but this is why swing trading right now in this kind of um, choppy weather is so important, that you know when to get out, because it is choppy. It's like a wave that's going to break in another wave and another wave, and it's constantly moving. So, which is good. It's good for swing traders because you get in, you get out.
Yeah,
And
yeah.
what
Now,
we're
from what I've learned lately, especially with all this, what shall we call it? Not inconsistency, but this flux and unknown. It's rather to get in, get out, than don't stay Don't stay in because it's so unpredictable at this point in time.
Yeah, I mean, it's a matter of your personal stamina and your risk tolerance, and um and also the people that get in, they have more of like a 10-year perspective and expectancy of it going super up. But I like to always be in profit, so it's all about like um if you like to win daily, or if you're like can hold off for winning for 5 to 10 years, I would say. But I like to win. So I'm gonna just
Well,
go a little
you,
bit more into these other indicators really quick. The trend indicator. Then when it's time to get in, you have a key that says, "Hey, there's a key opportunity coming." The bell
oh,
comes
okay.
in when there's like momentum. It says, "Ding, ding, ding." It's moving. It's moving. And then when the direction is still moving upward, the 1 will come in and the 2 will come in. It shows you that there's still momentum in that direction. When there is
Okay.
no color, so this doesn't reflect the volatility index in the color. It's just going to be green when it's in an upward movement. Now, when there's no color, it means it's in a downward direction. Okay, it's a downward
Okay,
momentum.
cool.
So when it becomes clear in the candlestick, it's like if you don't take profit now, someone's going to take it for you. Okay, so double click on that. Let's go to the next indicator.
Okay, so if I were to conclude, then that money in the bag is basically start looking at exit.
Yeah, it's saying so this is a cycle of seven movements up, and an entire
Okay.
cycle is 7 movements up, and then when you stop getting a number on top of that candlestick, it means there is some tension in this direction. And you could see as soon as that money bag came in, it's a warning. The dollar sign, you can program these to have any kind of like number or sign, but the sign stands for a 5 and the money bag stands for a 7. And it's reminding you, you better take profit. You better take profit, right?
Okay. Okay.
I mean, and then if the cycle is continuing, it would say another key would come in and the bell would come in. But Bitcoin, it shows that Bitcoin is having some strong ups, and then they're also having downs, and it's just doing what it does. So the next one is the trend strength indicator, and it's pretty easy. When you have the histo or the little mini arrow up, means that this is the trend is moving up, and then when the first red dot comes, it means the trend is going down. And then
Okay.
again, it will say like, okay, you're gonna have that the dot trend is going up and up and up when it's up. So you can see this is similar to the volatility index, where the bottom is a floor, and you can see the bottom line area starts at a 20 and it goes down to a 0. And you could see like for the 5 minute, it hasn't gotten to the ceiling yet. The ceiling would be like when it gets to 80 to 100. That's,
Okay.
when it gets into that green zone, it's again, you should be taking profit, because what it doesn't, I mean, if you look at the historical data in this, it always goes back down when it gets into that green box. And then
Yep.
so that's like one of those things. If you don't take profit, someone's going to take it. And then the bottom one is the volatility index, which is what's creating the colors on the top 2 indicator areas. And so it just came out of oversold on the volatility index. And you can see that the line is black, which means the candlesticks on the top indicators are going to be black. And when it gets into this oversold zone up top, the 80 to 100, again, that's one of those things you better take profit. So, if you're trading on a 5 minute, if you start on a 5 minute, you end in a 5 minute, it's not going to get confusing. But things get a little confusing when you're jumping in on a 5 minute and then you start looking at a 15 minute, because then you're just like, oh my gosh, I don't understand. Like, each one of these are going to be a different position depending on the average time frame, because these indicators are working on the time frame of the chart that you're working on. They're giving you averages within a 5 minute average of what's happening. So I think it's really important that you stick with whatever time frame you started on, and you got to learn your personality. Right. So
Yeah.
go ahead. Any questions?
No, so that makes sense, because obviously, you got to decide, which is going to be your base time frame, and that's going to determine your, are you a quick in and out, want to do a couple of trades in the morning, or do you want to, go in the morning, get out in the afternoon?
Yeah, and some people, and the other thing is the percentage of earnings is lower on the shorter time frame swings, and so it will be determined by how much money you have to trade. And if you're starting with a low amount, it's probably better for you to do 7-day trading where you're getting in and getting out in 7 days, and therefore you'd probably want to start with a 1-day chart because you have more of an opportunity to get higher increases in your money if you're trading on a higher time frame. So the one last thing I want to teach you is on TradingView on the left hand side, there's this ruler and it's 1, 2, 3, 4, 5, 6, 7, 8. It's the 8th little on the very, very left hand side. It's the little stick
Okay.
with little lines on it. If you click on that.
That one,
Okay.
the measure.
Yeah, and then so once you click on it, you have it on your click box. If you go to the top indicator where it says entry and you click once on the left hand side, like maybe, yeah, that one, click once and now let it go. Now drag that to like a top, an area where it grew to a good area and then click once. But wait, go to the top of a candlestick. Okay, we'll say you did that. Okay, so the results shows that it went up 44.8%. If you're going to read this on the left-hand side, it went up 44% in 27 bars, and that means 27 days. Okay, because on this one, the D, it's on a 1-day chart now. So Thomas changed the chart from 5 minutes to 1 day. So in 27 days, it went up 44%. So if somebody is new and they just want to take a small amount, say $500 to get in, and you want to work on doubling that, yeah, it's going to take you longer to get large increments like that. It took 27 days to move it from there to there, but sometimes the slow turtle wins the race, right? You still almost doubled. If it was $500 invested, then it would be like you made $250 in 27 days. And it doesn't seem like a lot, but it's slowly getting you to a larger amount of money. So, for example, I had a client that had $10,000 and in 60 days, utilizing Bitcoin and Ethereum only, those two big coins, he took it from 10,000 and turned it into 18,000. It was like one trade was $4,000. He was mad. He was mad that he made 4,000. I said, "Why are you mad?" He goes, "Because what if it went up more?" And I was like, "Look, you have to take profit because if you don't take profit, you may not have profit, right?" So he got in. He was more of this long-term holders, and I think now seeing that he has stickage, and his money is in USD now, and he doesn't have to worry if the market's going up and down. It reduces your stress substantially because you're winning trades, you're in and you're out, and the more you multiply your money. I mean, he almost doubled his money in 60 days. So now he's working with 18,000. He can take out the 8,000 and just keep working with 10,000. Or then he can, if he does the whole 18,000 in on something, if we would double that, then it's 40,000. So he's got leverage now to work with. But don't think that you have to start with large sums of money. The most important thing is to just start learning how to multiply your money. And if it takes you like a month, 2 months to learn this, I'd rather you start with a small amount than a large amount so that you can just understand when all of these indicators and they're doing quantitative math, when they're all in sync, you have a better chance of winning. And as long as you understand specifically the red is low and you want to buy low and you sell high, but if in your district or where you live, if you're allowed to sell the market, that's a whole nother lesson. But these indicators would guide you in that direction too. Right. So happy trading.